Let's talk about the global setup. Richard Harris, Chief Executive at Port Shelter Investment Management, is with us on the show. Richard, last week, U.S. markets closed their best ever week, at least in over a year. Yesterday was a session of consolidation, cooled off a bit in terms of the index levels. What from here on? How would you assess the near term? What would be the big triggers to watch?
Well, I think at the moment we're not seeing any real major triggers. The markets are adapting quite well. They're adapting to higher inflation. They're adapting to higher interest rates. We're not seeing any really critical moves, except, of course, in the long end of the bond market, which was probably overdue a move anyway. And I think that what we are seeing is that as markets adapt, we're not seeing any real triggers coming through. The triggers for, say, a market fall usually come rather unexpectedly. We've had Ukraine, we've had Israel. They would normally be regarded as quite big triggers for market falls. That hasn't happened. I see the markets really continuing in this vein of some moderate strength, probably for the next quarter or two.
Okay. Richard, hi, good morning. This is a festive period here in India. We have Diwali upon us. And, we sort of look back at the year gone by. It's been a very good year for the Indian markets. I mean, the Nifty is up 7%, but the mid-cap index is up almost 27% this year. Do you think we can build on to those gains in the Indian market? Can we replicate it in the year to come?
Well, what's interesting at the moment, I follow market narratives quite closely. And one of the market narratives that does seem to be coming through is further foreign investment in India, or at least indications that might happen. This is largely because, of course, foreign investors are moving away from China for whatever reason. China, of course, is going through a difficult economic phase at the moment. I'm fairly sure that they will actually look to stimulate the economy quite sharply. But at the moment, there is a narrative drift from China into India in terms of foreign direct investment. And I think that that's probably going to be quite supportive of the market.
Hi, Richard. Good morning. I recall you saying that it's too early to sell or panic in these Indian markets. And Indian markets, well, they're dying hard, if I recall correctly the last time we chatted. Well, could you tell us, the big narrative of the last few days has been the Fed. It doesn't have another rate hike. At least that's what the equity market participants believe. Do you believe that they'll do one more before they're done and dusted?
Well, I think the Fed are in a bit of a hiatus at the moment where they want to look at the data and see where it's going. Most of the data has been surprisingly strong, which would certainly have a bias on raising. And I think that that's probably their base case at the moment, that their bias maybe is on raising one more. Whether they need to do so, I think will really depend on what happens over the next 2 months. We saw slight weakness in the jobs market. Okay, I think that needs to be proved still. But the economy still seems to be going reasonably well at the moment. Now, we haven't had the big rise in interest rates coming through in terms of things like mortgages. But don't forget that the market's a lot less sensitive, certainly at the retail level, to higher interest rates than they were, because we now have a big retired community who are on pensions that are often fixed with inflation. So, we're in a much more complex situation, and that's why I think these markets are going to die hard.
All right. Well, thanks a lot, Richard. Always great speaking with you. Short, snappy, but very informative. So thanks a lot for that. Let's slip into a quick break. On the